Welcome everyone to today's RaaS Research Group Stock Take webinar, where we are completely focused on gold. Why gold? Well, in the past 12 months, the price of gold has surged due to central bank purchases, geopolitical tensions, and economic stimulus measures across a range of countries. Today, gold is trading at over $2,600 per troy ounce. And putting that into the Australian dollar terms, that's more than $4,200 per ounce. We are in genuine record territory. And why is everyone talking about gold, and why RaaS Research Group have scoured the ASX to find the most promising gold stocks to present to you today? We've got 4 cracking companies, and I urge you to listen to their stories. They're all going to say they're undervalued, and RaaS, in doing their research, have probably identified stocks that genuinely are undervalued. Shortly, I'll introduce Josh Baker, analyst at RaaS Research Group, who has recently written a detailed gold sector note and who will provide a keynote address providing his views on the gold sector and, most importantly, what he thinks lies ahead. Then we'll hear from representatives of Alkane Resources, Flynn Gold, the recently renamed Aureka Limited, and Santana Minerals. Each company will present for 10 minutes, then be on hand for about a 5-minute Q&A session. So if you've got any questions, submit them using the Q&A button at the bottom of the screen, and I'll put them to the presenters. And at the very end, we will hold a special panel session where we're just going to talk about gold, what we think's happening in the sector, and where we think it's going to go. Thanks for joining us, and without further ado, let's get started. Please join me in welcoming Joshua Baker, analyst at RaaS Research Group. My apologies. Josh, over to you.
Thank you. Hello, everyone. As Dave mentioned, we did note earlier in the year off the back of the Australian Gold Conference, and this webinar is a function or extension of that, and talk about a few key points and what's sort of been happening in the gold sector, particularly from the Australian or the ASX perspective over this year. So just with the agenda today, quick little review of gold in 2024, the impact on gold equities, which includes capital raisings, the return of profitability at the marginal end of the producer spectrum, and a little brief note on each of the 4 companies presenting today and why we at RaaS think they're interesting. So go to the slide 4. So in terms of a review on gold, so both in US and Australian dollar terms, it's up quite strongly today at 29-38% respectively. Obviously, the Aussie's doing a bit better as the currency's depreciated against the US. It's been a plethora of tailwinds for gold. I'm not sure if there's been any actual headwinds yet, but we've got inflation and rate cycles turning over, economics concern driving stimulus, which is being positively correlated to gold performance, geopolitical tensions, war, and the like as well have generally been supportive of gold in this last year and in this environment. And in addition to that, there's generally been sort of net buying of gold, even some flows into the major gold ETFs, but predominantly driven by central banks and in emerging countries specifically as well. So all of this is sort of compounded to be a bit of a one-way trade in gold, and it's definitely been very supportive of the gold price. So just on the next slide, as we look at the impact on the gold equities, so there has been a sustained rally in the gold price. This has flown through to the gold equities, and on the following slide, we'll see they sort of just kept up for the most part, which is not what people generally want in an environment like this. But going by the major global indices, the GDX, GDXJ, and then the Australian All Ordinaries Gold Index, they're all up between 20 and 30%. Respectively, which is in line with US dollar gold, and from an Australian perspective is actually kind of underperformed Aussie dollar gold. In the ASX perspective, all the producers have generally gone up, but there's definitely been a shift down the risk spectrum where we've seen the cohort of the high cost leverage producers and the later stage developers see the biggest flow of capital into them, with some very, very material share price gains in companies in those sectors. And a lot of it has predominantly come in the second half of this calendar year so far as well. So whilst it's been a positive influence, that risk on really kicked in as the current financial year kicked into gear. And sentiment and flows into explorers have been very mixed. So if you have a very special discovery or delineation story, you've been very well supported and rewarded. But conversely, if you're a lot earlier stage, potentially less clear what you might have, it has at times been harder to raise capital. But ultimately, it is easier than prior years in the current environment for explorers to raise. And when we focus on those producers, there's definitely a case where the gold prices are flowing through. A lot of them are actually unhedged these days, and several companies have bought out hedge books into the price surge, so see that benefit. And at the same time, you've seen costs in the sector moderate. So fuel is flat to down, energy prices, wages are definitely softening. So they're still going up, but softening. But particularly in areas like WA, where you've seen other commodities come under pressure, you see care and maintenance, growth plant shelf. It provides a lot of labour availability, which is very important, more than the wage increases because of a productivity perspective as well. So when you can actually run your mines harder for longer with lower turnover, more consistency, it's actually, you can stomach wage rises a lot more easily. So ultimately, we've just seen margin expansion across the spectrum, and several marginal producers who weren't making money last year are now on track to make pretty good amounts of money. So just on the next slide, we have an image of the impact on gold equities. So the blue line's US dollar gold. 3 indices I mentioned before are there, and they're generally tracked in line with the gold price. So just on to the next slide with capital raisings. Capital raisings have been very elevated. So it's another sign that the risk appetite and the sentiment towards gold is very strong. It's been very heavy in the second half of the year, and a list that will be on the following slide. Not exhaustive, but a lot of major capital raisings. There's at least $1 billion raised so far in gold on the ASX. And one thing to note is in many cases, it's actually a very large proportion of the market cap pre-raise. So we're talking 20 to 40% of the market cap. So a lot of companies are getting away with very big raises. And on top of that, the performance post-raise from the raise price or even the pre-raise price has been very, very strong. So it's been rewarding to participate and support companies raising capital on the ASX. Definitely a big skew towards either producers expanding production or late-stage developers that are locking in funding for mine restarts or mine builds as well. And one thing also to note, which you don't often see and haven't seen for a while, is that the level of insider participation in these raises has been exceptionally strong. So I think the majority of them have had insiders participate, and in some cases represent very large portions of the raise as well, which is quite interesting. And also just quickly note here 2 particular examples being Black Cat and Meeka Metals. I will disclose I have a personal holding in Meeka Metals. By both of them in August raised equity to go with project funding, but because of the strong gold price environment, rise in their equity prices, they're actually able to go again just 2 months later and replace the debt with equity and fully equity fund. And given some of the issues junior miners and gold have had in the last few years, where if you ever have any issues or hiccups along the way, the debt is what really strangles you. So they tend to probably have more flexibility as well and taking advantage of the strength to reduce the risk profile of their mine restart programs as well. Just go to the next slide. Just a list of the notable capital raisings, the sum, just some key statistics around those as well. So if we just quickly go to the next slide, sort of as mentioned before on a prior slide, there's a return of cash flow. Gold price is higher, costs are moderating, productivity improvements. So it allows a lot of these companies to generate higher margin, and particularly higher cost operators who probably had some issues or struggles or had operations to fix up, which are probably compounded by labour availability, have definitely been able to sort of turn it on, generate some cash flow and take advantage of these benefits that are emerging. And then two examples we'll quickly touch on Aureka and Catalyst. So just heading to the next slide with Aureka. So they have a mine in WA. For some time it's had issues sort of ramping up, accessing higher grade feed sources and the like. So there's been a bit of a turnaround, but as the chart or the graph on the right hand side of the slide shows, that after a while of not generating consistent cash flow, particularly after you have development capital spend, exploration and things to sort of keep the mine running over time, particularly in the last 3 to 6 months, you've seen as the gold price has really inflected up and they've got a handle on operations costs, a few fundamental factors like a higher grade underground ore source, the underlying cash flow generation from operations has accelerated. And on top of that, it's outpacing the ongoing commitment for development spend and exploration spend. So you're now starting to see more of a net cash sort of come through from an operating level. And, as this inflection has happened, the share price of the company has gone up 180%, which is a phenomenal return to sort of have. And most of that's actually come in the last 6 months or so as well, which is quite interesting. And then going on to the next slide with Catalyst, similar case there. They've got 2 mines, one WA and Tassie. Hentley sort of ran into some issues, which they're starting to get a hold on. Plutonic was an acquisition and a mine that was probably underperforming and run not so well. And sort of over the last 12 months or so, they've been getting a grip on Hentley, running Plutonic a lot better, sort of have a growth story to offer as well. And similarly to Aureka, as they get these operations under control, a better handle on costs, and the gold price kicks through, unhedged as well, you're starting to see that cash flow come through at the operating level, and now it's outpacing some growth spend, development spend, and exploration spend. And similarly to Aureka, the stock has gone up about 230% as a result, and predominantly in the last 12 months as that cash flow comes through. And I think that's part of the consistency. You see it more than one off as a quarter or 2 quarters. It's 3, 4, 5 quarters and accelerating to the upside. So then just try and finish up on my segment here, presenting companies. This slide is just highlighting some of the key points of why we find them very interesting and they're worth looking at. So, with Alkane, established producer, it's spending a lot of money to access additional ore sources, which will then be able to double production over the next 2 years if it all goes to plan. So, classic mental model on cyclicals, peak spending, lower share price, spending rolls off, production goes up, cash flow generates, and ultimately should have some prospect for a good return as an investor. And, when it trades at a 300 million market cap and Aureka is $1 billion or Catalyst is 600, and they're very similar companies and similar profiles, the valuation seems quite low. Following on with that, with Aureka, again, it's a reboot and a recap of a company that went into administration. So it's back focusing on Victorian exploration, did a recap raising just last month, which will disclose I did participate in myself. So I'm an investor there. So back to basics, Victorian exploration, existing resource exploration target that highlights strong potential upside, and all you have to do is get in there and drill it and prove it up there as well. So just given the low valuation starting point, looks very interesting as an exploration play with a good asymmetry at the upside. In a similar sense, Flynn represents a similar exploration upside case, relatively low market cap, capitalised to spend on exploration, very interesting hits to date, very large system around granodiorite, which definitely has a lot more upside as you drill it out over time, and an exploration target there that definitely shows the potential to delineate a resource that provides a good base level or foundation to build off, to hopefully achieve an economic scale resource in time. And finally with Santana as well, board of management sort of tune up late last year, sort of accelerated the development. This has also been helped by a change of government in New Zealand, which is doing a 180 in terms of supporting heavy industries, which includes mining through the fast track bill. So that will just make permitting, environmental, etc., a lot easier, and gives a bit more certainty that people who put in the time and effort will be able to build a mine and hopefully generate strong returns for the investors by doing it as well. And sort of on that point, it just highlights an example where a lot of political cycles, sometimes you have governments that don't like mining and ones that do, and sort of what countries you can be in or invest in does sort of come with a cyclicality to it as well. And obviously with Santana, it's a tailwind for them. And then just finally to wrap up my segment, so in the note we did in August, we highlighted 8 companies out of about 30 odd at the Australian Gold Conference, 3 of which are presenting today. And since that time, 6 of the 8 have had a positive return, 10% average. And then sort of similar to the feedback I had, Alkane and Mika, who are producer and developer respectively, have actually had the sort of the best performance, whereas amongst the explorers, it's a bit of a mixed bag as well, but generally positive too. So thank you, everyone.
Thanks, Josh. Great presentation. Really set the scene for the rest of today's presentations and given a little highlight to 4 of the companies presenting today. As Josh mentioned, there was a gold note produced a little earlier this year. which can be found, I should say, on the RaaS Research Group website. Now, Josh will be back along with all the other presenters a little bit later today to answer any questions you may have, particularly relating to the gold sector, outlook, and the macro environment. I'd now like to welcome our first company presenter, Nic Earner, Managing Director of New South Wales-focused gold explorer and producer, Alkane Resources, ASX code ALK. Nic, over to you.
Thanks, David, and thanks, Josh, for that great introduction. So let's get into it. Next slide, please, and then pass the disclaimer again, thanks. So a quick snapshot. As Josh said, we are a producer based in New South Wales, near Dubbo, in between Dubbo and Parkes, about 4.5 hours drive northwest of Sydney. We've been operating the Tomingley gold mine, which we discovered in the 2000s. We've been operating that since late 2013 with first gold in 2014. So we're coming up 10 years now. So I'm going to talk about that. And I'm also going to talk about our large gold, copper, porphyry project, which we have to the east of Dubbo, which we call Boda Kaiser. So very briefly, we're on track to produce between 70 and 80,000 ounces this year, which is our guidance. And I'll talk a little bit about the history and then ramping through to 100,000 ounces, which I'll talk about. And Boda Kaiser, a very large project, 15 million equivalent ounces. And, we're looking at partners as well as doing a whole range of exploration there as well to further advance it. So next slide, please. If I review just the last 12 months, and so the gold conference that Josh was talking about was in middle of the year. So before the gold conference, we'd increased our reserve. So Roswell is our new mining area that has about 700,000 ounces in reserve. We'd commenced mining production at that new area, which has a whole heap of new efficiency measures, which I'll talk about. But we were halfway through, building the second cell of a new tailings dam, which we've done. So we now have over 3 years tailings storage capacity there, 3 million tonnes worth of storage capacity. So, quite well set up from an infrastructure perspective. Since the gold conference in the middle of the year, we've now constructed a paste plant to run paste into the new mining area. And we've commissioned a flotation and grind circuit to improve recoveries. We've got indicated resources which have led to the scoping study at Boda Kaiser. And we've also completed the scoping study as well, which I'll talk about. Next slide, please. Very briefly about our company. We've got 600 million shares on issue. Share price yesterday was 52 cents, which puts the market cap about 315 Aussie. At the end of last quarter, we had cash of just on 51 million bucks, cash and bullion. Expect to have similar at the end of this quarter. Our share price has been broadly flat across the period of time, apart from a small sort of rally through the middle of the year. Interesting things to note: our chairman, Mr. Gandel, owns 18% of the company, and then around 12% of the company is held by index funds mostly, which perform a large part of the institutional investment. And so we're about 65% roughly retail held. So a stock that has a lot of retail investors, given the amount of time that we've been there. And there's plenty of coverage that you can find on our company as well. Thank you. Next slide. I'm going to talk about the Tomingley gold mine. Just a few things to note. The picture that you're looking at in the top left is what we call the Wyoming one pit open cut mine that we mined over the last few years, and it now has our portal into the underground mine in it. Next slide, please. So Tomingley. If you look at the diagram on the right, you can see we've mined 4 open cut pits. There are 4 of the grey blobs, and the 2 waste rock dumps are there. We've got two tailings dams, one that's finished and a brand new one to the south. But what we did in that area that's in yellow, San Antonio and Roswell open cut, we found this new mining area through 2018, developed it up, got it approved, and ran an underground drive over 2.5 kilometres down to it, where we're now mining underground. I've got a picture of that coming up. We also got permission to move the Newell Highway about 1 kilometre to the west, right, which is still to come. And so quite a large, project approval process to get to this point. You can see over the last decade, we've had different production, open cut to start with, then we transitioned to underground, and now we've got this new mining area coming on. it's the grade that drives this ramp up in production, as well as an increase in capacity of the plant. So there's a few key metrics there, but I think everything that Ian and Josh referred to are really coming to a point of very strong cash flows, which I'll dive into in a little bit. Next slide, please. The capital projects that we have underway, we've finished the paste plant, which we're now commissioning. We've finished a flotation and regrind circuit, which we're now optimising because it's actually been commissioned. We start work on open cut infrastructure through next year, and we start moving the highway through next year. We've actually, the reason I say we're doing stuff in quarter four, we've already awarded the contract, and we're, we built, put fences in and all this sort of other stuff. So we've actually sort of commenced work in there. We're in that sort of early stages of approval project. So yeah, there's a fair bit going on, all ready to go to the next stage of production. Next slide, please. So let's dive into it a bit more. So this is looking quarter by quarter over the next 2 years to give you a feel, because it helps explain things. If you look at the top line, you see that we're slowly increasing production. Okay, fair enough. But what's driving that? The mill tonnes, you can see, stay pretty much the same until we bring online a plant expansion in 2026 when they go up. And correspondingly, the grade falls in 2026 because what's happened is we've brought the open cut mines into production. You can see prior to that, the head grade rising. That's just a natural part of the sequence of mining the new area at Roswell, which is what drives the ounces up. But you can also see in the line below that, through this quarter and then next quarter, you can see the recovery rising. That's due to this flotation and fine grind circuit that we've put in. Basically, we've gone from milling most of the ore at 105 micron to milling a portion that floats, which contains most of the gold, 90% of the gold, down to 12 micron, which significantly increases the liberation and therefore increases the recovery. Our sustaining capex falls away. That's why our all-in sustaining cost is higher this financial year. So it actually falls away sort of in that June quarter. The reason for that is we're doing a whole heap of development. We're doing a lot more mine development underground at Roswell than typically we would do. And so going forward, that's what helps drive that to reduce. And growth capital, in this quarter, you'll see growth capital, similar-ish number to September quarter. But the big thing that we have coming up is the cost of moving our road. Now, we're intending to fund that out of cash flow. We have a debt facility already in place with Macquarie, which we have $45 million drawn on. We have hedging to cover that, which is significantly out of the money at the moment because that hedging was set in 2023. And so the price then was 28.50 Aussie, talking Aussie 28.50. But what that means is that for every ounce we produce, we get about 90%. So at the moment with Aussie gold at 4,100, we're getting about 36.70 or something like that across every ounce. So very strong cash flows for us coming up. And so you can see with that capital falling away and the production increasing, as to why Josh referred to us going through an inflection point, which is certainly how I point that to people. Our cash balance will be steadily rising from this period of time. So we certainly hope to see that recognised in our share price. Next slide, please. This is a picture of the Roswell underground. This is looking west. It's our stoping blocks. I don't expect it to mean much. But what I really want to point out is people can see that trace of red around the outside. They're the continued extensions that we constantly get at the edges of our ore body. So this is 350 metres underground. It was drilled from the surface. So what you're seeing now is all the peripheral parts of the ore body. So we're getting a lot of extensions. So we're very excited about the Roswell underground and its productivity. Next slide, please. We bought a whole new fleet. These are 2900 XEs. These are remote loaders, Cat Command, diesel over electrics, reduced diesel emissions as a result of that, the latest generation from Caterpillar for the underground loader. So what we've really focused on is underground efficiency. We've got all range of measures. We've got an ore pass and other things, all designed to get extra efficiency from the increased travelling distance that we have at Roswell. So we're very much looking forward to seeing this equipment. Well, it's already running fully remotely, so we're pretty excited about that. Next slide, please. This is the paste plant, which is being commissioned as we speak. So the purpose of this is to get full ore recovery from Roswell. And certainly I'd encourage anyone who wants to understand how paste works in a mining sequence to Google or ask us a question later on. But this is built and being commissioned at the moment. Next slide, please. We put an extensive road network in. This joins the mine, which you can see on the right, and then all the way down to the paste plant. So this will become the haul road for the new open cuts when they come in. And you can see in the distance on the right-hand picture, the left sort of grey squares, that's the whole new tailings facility with the Wyoming pit in the foreground. Next slide, please. This is the flotation and fine grind circuit, which is now operational and running, and we're in the process of fine tuning that. So the purpose of this is to move us up 7% in recovery. We move from being a typically 83 to 85% recovery up to 90 to 92% recovery. And the reason for this is just the mineralogy of the Roswell ore body lends itself to a finer grind for increased gold recovery. Next slide, please. And what I really want to reassure people, happy to dive into it more detail or send me an email afterwards, is we have production on this current 5-year plan that we have. The thing is, we've just got so many different parts of the ore body open, I can't really give you a decent scheduling look at that, but we intend to be running at the 100,000 ounce run rate for the foreseeable future. Thank you. Next slide, please. On to Boda Kaiser, our large gold copper porphyry. Next slide. This is a 15 million equivalent ounce resource, but lower grade. So what we have is 15 million equivalent ounces at a 0.58 gold equivalent. Or another way to look at it is that we have 7 odd million ounces of gold at 0.3 grams per tonne gold and 1.5 million tonnes of copper at 0.2% copper, right? So it's a way to look at it. And what you can see is a whole heap of drilling there. There's the better part of $50 million worth of drilling, and you have indicated resources there at Kaiser and Boda, and then inferred at depth and a little bit, but particularly at Boda 2-3. And 2/3 of that 50 million ounces is indicated quality already, which, as we go to the next slide, allowed us to do this scoping study. The purpose of the scoping study is to wrap a value around it so that people can say, well, what could this be? And, you know, certainly this is a project for a price environment of plus $3,500 per ounce gold and a plus $10,000 per ounce US copper price. And we're a little bit under that in copper and a little bit over that in gold at the moment. So what you can see is, were we to mine this at 20 million tonnes per annum, and economies of scale really drive this, it would cost us the better part of $2 billion to build, and then it would start pumping out a whole heap of money, 30% IRR, to make 35,000 tonnes of copper a year and 160,000 ounces of gold. It's equivalent of being about a 280,000 ounce a year gold mine. So, you know, solid, not the scale of Hemi at plus 500,000 ounces, but, you know, very, very solid producing asset with a very long life. And so we own farmland underneath it and all the other things. What are we doing now? We're doing environmental studies. If you go to the next slide. What we're doing is environmental studies. They're the open pits there. So it's water, air, noise. You know, we've broadly designed a plant. We have to work out where do we put it. We're doing sterilisation drilling, all these other things that we're doing in order so that we can put in the environmental approvals. And that is because we'd like to have a potential partner, $2 billion. We've got reasonable cash flows, but not sufficient to launch this project. And so we'll need a partner, but to take it through approval process makes it much more attractive, gives a lot more certainty to a partner. And so that's what we're continuing to do. And we've done that heaps of times ourselves with, you know, obviously the Tomingley approvals and back before we spun out a rare earths project, the Dubbo project approvals and all that sort of thing. So we're certainly very familiar with that. And so we continue to do regional exploration, which we're pretty excited about. And we continue to optimise this, you know, this project. But most importantly, we go through the environmental approvals process. That is in itself a 4 or 5 year process. So we're getting into it. So if you go to the next slide, please. So if I look ahead, right, if I say, okay, what might I see in the next 12 months and what's my near-term catalyst be? Well, we'll be putting out our, you know, update early in January on what we produce and all that sort of stuff, and give a status update on the paste plant commissioning, which of course is commissioning, so that's good. Flotation and fine grind, early results, that's good too. We'll continue to expand the Tomingley resource base. So we're doing a lot of near mine drilling, but at depth and regionally as well. So we'll have results on that coming. We'll have some early results probably in late January of drilling that we've done in and around San Antonio. We're working on a solar plant. It's a difficult one. You know, you've got to do these power purchase agreements and all this sort of stuff. So we continue to work on that, but we're in the closing stages of putting that in near Tomingley, a 5 megawatt plant. We continue to evaluate and pursue inorganic growth opportunities. I think that there is a lot of synergy opportunities for single mine producers within the ASX to create value and to stop riding different, capital and cash flow sort of rises and falls, which get whipsawed around, to get into the different indices, which attract a stable index fund investment. So we certainly continue to look for that. Not easy in this pretty volatile price environment, but we certainly look for those opportunities. We'll continue the environmental studies I just talked about and regional exploration as well at Boda. So we've got a fair bit going on. We've done a lot last year. We've got a lot coming on this year, but most importantly, we want to be really going through a cash flow inflection point and generating a significant amount of cash. So next slide, please. So let's summarize. We've got a substantial cash flow coming. We're moving to 100,000 ounces. We've got a history of getting projects approved, and we've got the Boda Kaiser project, which we'll continue to look at. So I do have a couple of backup slides if needed, but thanks there. I'll throw back to you, David, to let us know if we've got any questions. Thanks.
Thanks, Nick. Great presentation, and clearly a company that has developed at the exact right time to benefit from the not just the gold price, but also the demand for gold more generally. Now, we do have a number of questions, so we'll jump straight into it. Exploration is clearly one of the focuses and the growth focus for the business. Does M&A come into the thinking? There's a lot of gold opportunities in New South Wales in particular. Do you keep an eye on what's happening in the neighbourhood?
Yeah, we do. We keep an eye on both in the neighbourhood and Australia-wide, and we've even looked at some stuff in New Zealand as well. But absolutely. So in general, we don't look at pure play exploration things because we have so much exploration ground ourselves, which we're very familiar with and very prospective. But we certainly look at near-term developers, and we look at other producers, although, value divergence is very strong within other producers. So we do keep a very close eye on things. We've done deals. We picked up the Sandfire tenements as they left New South Wales. And historically we had investments in Genesis and Calidus and all that sort of stuff, all trying to do inorganic growth as well as the exploration focus, yes. And that continues, yes.
And looking forward, is hedging an option for your future planning?
Yeah, so we're hedged at the moment out to the middle of 2027, right? At sort of 35% of our production. So certainly, were we to take out more debt, then and our cash balance, wasn't hundreds of millions of dollars, and the debt was just simply a working capital facility. But we would take out a debt for project finance, then yes, we would put some kind of price protection in, right? We wouldn't swim naked. But whether that is best served at the moment with forwards through hedging or through buying puts, we would evaluate that at the time. But certainly we're not, unless we take something over and bring something else into production which has its own project finance facility, we're not looking to change our hedging position between now and mid-June 27.
As in most states, particularly in Australia, the social license is important. What level of community support does Alkane have around the development of its projects?
So yeah, really, really, really high actually. So when we first put all the applications in there, this is over 10 years ago for Tomingley, we had 0 objections. When we put in the Tomingley expansion project, we had 1 objection one from anybody. So very high levels of support. The Narromine Shire Council's great. Everybody that works there, barring a couple of people, live, within Narromine, Dubbo, or Parks. So yes, certainly get a strong amount of community support. We obviously have community programs, and we're an influential employer in the Narromine Shire. Less so in Dubbo because they've got a lot of government services there, and some other large businesses. But yeah, very very high level of support.
Now you touched on the partner type scenario for the development of Boda Kaiser.
Yeah.
How will that evolve, and when do you expect news flow to be generated around that?
Well, not for a while. So, we've got a data room open. We've had several of the majors through that, but people should not read too much into that. The role of the majors is to be familiar with every project, and we're really seeing ourselves as positioning for when the time comes to really need to take that through, which is sort of effectively approaching FID, that they're ready and lined up and familiar and comfortable with it. Of course, we would take a deal if someone brought it to us now, but in general, the larger producers don't tend that they'll come in on an earning facility, like for instance, like an inflection dip within New South Wales. We're 45 million in a series of 5 or 6 stages over 5 years, but we're well beyond that because this is already an indicator resource. So unless something really dynamic happens within the market that pushes people to start approaching, so I don't expect much that's newsworthy, right? But we are heavily engaged, have people in data rooms and lots of stuff. But like I said, on a familiarisation thing rather than get excited imminent deal thing.
Final question, approvals. Been in the news a fair bit recently. How have you found the project? How have you found, the process in the development of your projects?
So we've pursued 3 major approvals over the last decade or a bit more. The original Dubbo project, the original Tomingley project, the Dubbo project, then the Tomingley expansion project. All of them have gone pretty well for us. There's no doubt that you do a lot of work that's churn, right? Things that seem obvious to us in the industry, aren't as obvious to sometimes the regulators or the community. And I often laugh because the proposition that you put in right at the start, invariably you emerge at the end of it doing pretty much exactly that, but you've gone through all these, checks and balances and stuff, which is fair enough. So we've found it, time consuming, but relatively painless. But like I said, David, we have broad community support. We're in a region which is, not a lot of contested sort of heritage farming or water areas. So that's beneficial. Yeah. So look, when I look around the world, I feel happy that I'm in the regions that we're operating in. Yeah.
Final question, which is probably more of a statement that seems to have come from an all-knowing shareholder. The share price has been pretty flat, but the production forecast suggests plenty of upside. What do you think is holding the market back, and what do you think will be the point to reignite that interest?
I think the point to reignite the interest will be people seeing positive cash flow, right? So because cash talks. So the different things that people have said to me that hold stuff back are, number one, that we've been spending money when other people are making money. So people think, well, I'm better off putting my money in that. 2, I think we've had, a concentrated register, right? And so people, with low volumes, so our capacity to attract larger people in, and that is a market cap function. So we will need to lift on the positive cash. So that's been holding it back. 3, I think that the circumstance and timing of the debt and hedging that we took out in March 2023, which is something we can't avoid. It was a reasonable decision at the time. Others aren't in a similar position, and so people often forget that if you're investing money in gold, you're not investing in something else, right? And so often, often it's the same in our thing. Like if you're comparing all 4 companies that are presenting today, people have to make a choice to allocate into us or something else, right? And so I think for Alkane, until we go through that cash flow inflection point, people are thinking, oh well, I think there's better growth elsewhere. But certainly, I've had a lot of people asking me to present, and different brokers and stuff recognising that where are outsized returns potentially going to come from. So I really hope that these quarterly results we put out, or at worst March ones, are really reigniting it. Yeah.
Well, we look forward to watching the results with interest, and the inflection point that we hope comes from those results. Nic, a great presentation. Thanks for your time, and we'll welcome you back a little bit later in the presentations.
Thanks. Just skip through my supplementary slides. Thanks.
No problems. Now, I would like to introduce Neil Marston, Managing Director of Flynn Gold, ASX code FG1, who are actively exploring for high-grade gold deposits in Tasmania. Neil, over to you.
Good morning, Dave. Today I'd like to introduce shareholders to Flynn Gold, and the company has got an exciting opportunity for investors who are looking to get leverage in a new discovery in a tier 1 jurisdiction. Next slide, please. A couple of disclaimer slides here. And if we just look at the summary here. So Flynn Gold was listed on the ASX in 2021, been going for about 3 years now. Our exploration focus is definitely in Tasmania, with the aim of proving up one or more high-grade gold deposits in the near term. We've got 12 leases or licenses in Tasmania, predominantly in the northeast, and the 3 main projects we've got are Golden Ridge and Warrantina in the northeast, and also the Fire Tower project in the northwest. But our flagship project is the Golden Ridge, and with the time I've got available today, I'll really focus on what we've been doing there over the last 12 months. Next slide, please. Right, this is a corporate snapshot. You can see that we've got cash at bank at the end of September was about $1.8 million, which gives us a very modest enterprise value of under $6 million at the moment. Our top shareholders include RaaS Resources Fund. It's very significant to have that group on our register at this time in the cycle. They've been there from the beginning of the company being listed. And on our board is John Ford, who is the Chief Investment Officer of RaaS Resources Fund. So together with Clive Duncan, who's the former head of Bunnings Group, and Sam Garrett, who's a geologist, we certainly have a very competent board backing myself up. Next slide, please. So this is a bit of a very brief overview. Flynn does have assets in Western Australia, which were very much looking at lithium as well as gold when they were acquired. Most of those assets are non-core now, and our focus is definitely in the northeast of Tasmania, chasing the gold and also gold and critical minerals in the case of Fire Tower. Next slide, please. So why Tasmania? People ask me this all the time. And one of the reasons we're exploring there is the geological setting. The northeast part of Tasmania is well known as being an extension of the Lachlan Origin, which hosts the prolific Victorian goldfields. And that certainly extends into northeast Tasmania. It's got some high-grade gold deposits to prove that. Beaconsfield Gold Mine is the largest gold mine historically in northeast Tasmania, which has produced almost 2 million ounces of gold to date. And then further to the northeast, closer to most of our projects at a place called Mathina, there's been over 250,000 ounces pulled out of a mine there over 100 years ago now, and that was producing gold at almost an ounce per tonne, 26 grams per tonne gold. And so since the Mathina mine closed approximately 100 years ago, there's very, very little gold exploration in the northeast part of Tasmania, apart from the redevelopment of Beaconsfield a few years ago. And certainly what that means really for us now, after we've seen some of the high-grade discoveries made in Victoria, that with modern exploration techniques, new discoveries can be made. And certainly we're proving that with the exploration work we've been doing to date. Next slide, please. Okay, this is a map about our project area in the northeast. Golden Ridge is located about 10 kilometres northeast of that Mathina gold mine I mentioned. We also have a project at Warrantina, which I won't talk about too much, but that's got about a 6 kilometre long zone of mineralisation. And that's certainly a Victorian style orogenic gold system with excellent results from shallow drilling to date. And then thirdly, we've just announced earlier this week that we've been granted an exploration licence surrounding the mining lease, which covers the old Beaconsfield gold mine. And that mine still has an existing gold processing plant on site. So the exploration potential for us on that ground, which is a long strike from the mine, is very exciting. And we'll kick off exploration there with data compilation and targeting exercises in the coming months. Next slide, please. And if we move through the next slide to Golden Ridge, you can see there at Golden Ridge, we have all the hallmarks of a large intrusive related gold system with significant scale. The geological map there on the left shows you the younger granodiorite intrusion in the pink, and surrounding that are the older Mathina sediments, and within the sediments and also in the granodiorite itself, we've identified gold mineralisation along a corridor now which runs for 9 kilometres from Grenadier in the west across to Big Penny through Brilliant and Trafalgar. And that system is expanding as we do more soil sampling. Excuse me. So a summary of what we've done since we've listed. In 2021, the company drilled 14 diamond drill holes at the Brilliant mine with some good results showing mineralisation is open along strike there. 2022, the company also completed 12 reconnaissance RC drill holes along the granodiorite contact with gold mineralisation recorded in several of those drill holes. And then from 2022 onwards, we've really been focused at Trafalgar, where we've drilled about 19 drill holes to date with exceptional results, including 5 intersections now in the drilling there, which exceeds 100 grams per tonne gold in multiple quartz veins across the granite contact. We've also been doing a program of soil sampling, which has been very successful in generating new targets, particularly around the Link Zone, Trafalgar North, Grenadier, Duke and Big Penny. So there's more work being done around expanding those the targets we've got through soil sampling. And we've also recommenced drilling last month at the Link Zone, testing beneath the historical workings at the Golden Ridge. And all of that work that we've done previously led to us announcing about 4 weeks ago an exploration target, which has been a significant milestone for the company considering the time we've been listed. Next slide, please. This is the exploration target. You can see there we've got a target of between 449,000 and 520,000 ounces, with the predominant majority of that being at the Trafalgar prospect, where we've got between 1.6 and 2.2 million tonnes with a grade range of 4.5 to 6 grams per tonne gold, giving us a contained gold resource, gold exploration target there of approximately 300,000 ounces at the moment. Next slide, please. So you can see there, this next slide just shows you this, where all the ounces are. And so Trafalgar is by far contains the largest inventory of gold, and is also the largest in terms of, or the highest in terms of grade. The Link Zone, where we're drilling at the moment, has had very little exploration on it to formulate those numbers. So our intention is to try and improve our understanding of the mineralisation at the Link Zone, which will hopefully increase the tonnes and grade up towards that Trafalgar prospect area. Next slide, please. So this map just shows you the exploration target areas which have been used to calculate that 500,000 ounces exploration target. And you can see of the 9 kilometres, we've basically made our estimates on an area which is less than 30%. And there's certainly lots of gaps between Brilliant and the Trafalgar area. Diamond drilling, as I said, is underway at the Link Zone at the moment, and we look to improving the exploration target through that program of works. And certainly in the next 12 months, we'll be focusing, I think, predominantly a lot of our activities at Trafalgar, where we'll try and convert some of the exploration target into a mineral resource. The next slide, I think, takes us through to a video which will give you a good indication of what things look like in a three-dimensional view. So we start with just a bit of a flyer over the Golden Ridge. There's a map showing the area in Tasmania which we're looking at, and as you can see, Victoria's yielded over 80,000 ounces of gold historically, whereas in northeast Tasmania it's only generated less than 3 million ounces. So there's an excellent opportunity for us. There hasn't been a lot of mine development over the last 100 years, as I mentioned. This is the adit at Golden Ridge we recently discovered. And you can see here the area that we've been working in. Our base is in Scottsdale, which is centrally located. Excellent infrastructure in the area. You can see Golden Ridge. Our other projects at Warrantina and Beaconsfield are also there, centrally located around Scottsdale. Most of our exploration is in state-controlled forestry and plantation country. And as we zoom into a 3D view of the project, you can see the ridge with all the prospects on it. The pink line just showing there is the granite contact. We've got soil geochemistry, which I mentioned, which is highlighting this is arsenic. There's a big arsenic anomaly and a coincidental gold anomaly, particularly around that Trafalgar Brilliant prospect, but certainly that's improving. Some gold rock chip sample results have yielded some exceptional results of over 200 grams per tonne in the case of Brilliant. And this shows you the drilling that's been completed to date. And as we peel back the topography, you'll see the granite contact is modelled there in the light pink, and the red zones there are all the vein models which we've used in the exploration target. And you'll see at the Trafalgar area, the vein models cross across the granodiorite contact, whereas Brilliant, they're away from the contact. So if we'll now zoom down into the Trafalgar area where there's been mineralisation or gold intersections of over 100 grams per tonne intersected. And most of those line up within 3 veins, the Trafalgar Main vein, the Magazine vein, and the Trafalgar South. And in our last drilling program, the last 2 holes we drilled are into a new zone about 200 metres north of the Trafalgar mine. That was identified from trenching on the surface. And we've got some significant results there which have been modelled up as well. And certainly that's open in all directions. The model only extends down to about 500 metres depth at the moment. And as I mentioned, it crosses the granite contact, which really opens up the potential for mineralisation to occur all the way through the granites as well. At the Golden Ridge adit, we've got drilling underway there at the moment, testing that adit, which we found earlier this year. And this is the Brilliant areas. So the grey there is a bit less than what we see at Trafalgar, but we put that down to potentially it being a little bit away from the granite contact. So the exploration potential for us is to step north and chase that granite contact with further drilling. It's about 3 kilometres between Brilliant and Trafalgar, and vertical difference between Trafalgar and the Brilliant prospect is about 300 metres vertically between the bottom and the top of the ridge. And you can see there some of the other exploration targets. We're doing a lot of work at Grenadier at the moment, which is quite an interesting area, very similar in position to Trafalgar. So we hope to have more news on that coming up in the coming weeks. Next slide, please. So I'll very quickly skip through our other 2 projects in the time available. Warrantina, next slide, please. Warrantina, it's got 6 kilometres of strike length there. Historical mines have been produced gold at over or close to an ounce per tonne, and some drilling done by Greatland Gold, who sold the asset to us in June 2023, have been some very impressive shallow gold results. We've done some drilling there and confirmed that. We certainly like the looks of Warrantina, and we'll be doing more work there in the coming 12 months. Next slide, please. And then when we look at Fire Tower, that's a gold and critical minerals project in the prolific Mount Reid volcanics. It's been discovered several years ago, had some work done on it, and we've certainly established that there's excellent potential for not only gold, but cobalt and tungsten there. Next slide, please. And the next one, thank you. So mineralisation at Fire Tower has been identified across the 350 metres long corridor down to about 150 metres depth. Some very good gold discovered from shallow drilling. And we've gone back there really to test some of the earlier drilling, which we believe didn't drill deep enough. And we certainly have had some success there. We're doing modelling on that at the moment. And, you know, we look to be able to put out some form of an exploration target or get it to a JORC compliant resource in the next few phases of exploration. Next slide, please. This is a long section showing the 1 gram gold shell model there. We drilled 1 diamond hole and extended 3 historical holes. Got an exceptional intersection there of 17 metres at over 2 grams gold plus cobalt and tungsten with some very good high grade intervals in there. As I said, drilling's only been drilled down to about 150 metres depth. And we've, in the latest phase, we've identified this fault we call the Aureka fault. And really for us, the next phase of work will be to go and drill some deeper holes, testing our theory that the mineralisation is controlled by that Aureka fault. Next slide, please. So in summary, our 3 projects are all have the potential to yield high-grade gold. Certainly, Golden Ridge, our main project at the moment there, is very exciting in that regard. We've identified a maiden exploration target, so that's the launching pad for our next phase of exploration. And we're drilling right now at Golden Ridge, so news flow will flow through over the Christmas break and early into the new year. Thank you for your time today, and back to you, David.
Thanks, Neil. A couple of questions have come through, so we'll jump straight into them. Tasmania is more renowned as a tourist destination. So in respect to land access, how difficult is it for Flynn to be operating there?
Well, David, yes, Tasmania is a tourist destination. Certainly for geologists it is, because it's one of the most minerally rich places on Earth. And mining in Tasmania, there's a long history of mining. There's mines that have been running there for over a century. Mining generates approximately 60% of the state's export revenue. And there's a lot of support amongst the community and the local and state government levels for mining in Tasmania. So we have, in the northeast, we're exploring in forestry areas. We have no problems with getting permits to undertake drilling and exploration there. In actual fact, the regulator, the MRT, Mineral Resources Tasmania, is a very, very supportive organisation of what we're doing. They come and have a look at what we're doing on the ground, and getting permits to drill in new areas usually only takes a couple of weeks. So it's a really great jurisdiction to be exploring in, and a lot of support at all levels.
Now, you touched on Golden Ridge being located in forestry. How does that impact positively or negatively the prospect of starting a new gold mine in that area?
Yeah, look, very good question. Where we're exploring is the Golden Ridge itself still got timber on it. It's a timber production reserve, but it hasn't been logged recently. Where the granite occurs, that's where all the forestry or plantation timber is sited at the moment. So if we're looking at a project development, the footprint of what we're considering is an underground mining scenario. If we use Henty Gold Mine in the western part of Tasmania as an example, that mine's been running since 1996. The disturbance footprint of that mine is under 100 hectares, about 75 hectares of disturbance. So when we look at would a disturbance of that nature, would we be able to get that permitted? We would look to site most of our footprint onto areas that have been disturbed by the logging, so within the plantation areas, using topography to our advantage, of course. And when you look at that, the regulatory process to get permitted, the EPA process, we've looked at that. There's nothing which looks exceptionally difficult. There are mines going through permitting processes in Tasmania at the moment as we speak. So I think, and also 20 kilometres to the south of us, there are coal mines operating in the Fingal Valley. So a lot of things in Tasmania sort of don't attract headlines, get things done, and we don't think we'll have any real challenges beyond the normal processes to bring a new mine in the northeast of Tasmania into production in the future.
Final question. You've got a great project portfolio. What's the focus and priorities of 2025?
Okay, obviously a priority is Golden Ridge. That's where we've done most of the work and had most of the success to date. So over the summer period, we've got a soil sampling program across all of the granite contact, basically, to help identify additional targets. We're drilling at the link zone at the moment, so those drilling results will come through over the coming months. And then getting back to Trafalgar and doing more work there at Trafalgar, and also at the Trafalgar North prospects are very high priority targets for us to go and drill test. Warrantina, certainly some drilling there. That's covered by a mature pine plantation, so accessing there is pretty reasonable. And Fire Tower, that modelling work we're doing there really will lead us to identifying some deep targets to go and drill test. As I said, we've only drilled down, the mineralisation only sits down to 150 metres depth. If you look at the plumbing of mines such as Rosebery and Renison Tin, those guys are mining down a long way. So we see there's a lot of potential for Firetail to be a deep plumbed system as well.
Thanks, Neil. A great presentation and clearly a busy 2025 coming up. Investors love news flow, so we will be watching with interest. Neil, thanks for your time.
Thanks, David. Next,
I'd like to introduce James Gurry, Managing Director of the recently renamed Aureka Limited, ASX code AKA. As James will tell you shortly, AKA has undergone significant changes, including the appointment of a completely new management team, the successful recapitalisation of the company, and the resumption of trading on the ASX. To tell us more, I would like to welcome James to present. James, over to you.
Thanks a lot, David. Thanks for that introduction and very interesting presentations that we've had thus far. Thanks for the opportunity to present Aureka. This is the first time that we're actually presenting under the new name, image, and the new stock code, AKA. I might ask that we flick forward to the slide number 5 on my presentation. So just keep going through until we see the map. Great. I think this slide really represents the key things that we have from both a company point of view and also from an investor point of view. So if you're to take anything away from today's presentation, I think these are the key points. We're a completely new company that have picked up some old assets that are quite valuable and have been quite valuable. So for a company like ours with a market cap of around 14 mil, I think it is at the moment, there's nothing greenfield in our portfolio. We have an extensive portfolio of advanced exploration projects all across the key zones in Victoria. And the key thing for us is that our projects are proximate to operating mines and mills. And as we head towards the development stages in the years ahead, we will certainly look to work with the people and the owners that operate those mines. The key thing that enabled us to recapitalise earlier this year was the 700,000 ounces of the resource potential that we do have. Back in 2021, the old Navarre team came out with a JORC resource of 302,000 ounces at the Stall Corridor project at a good grade of 2.43 grams per tonne. At the same project, and on top of that, there's an exploration target of around the same size, but it ranges from 280 to 420,000 tonnes at a good grade of 2 to 3 grams per tonne. And we'll certainly be focusing on that exploration target potential as we go forward in 2025 and get on the ground very, very quickly. The other key project is in the Bendigo zone, and that's the Tandara joint venture. That's a joint venture with Catalyst Metals, and adjoining that property is their well-known Four Eagles project here in Victoria, very, very high grade, and they have that in a joint venture with Hancock Prospecting. So they're our two key projects, or I would describe at the moment our two most valuable projects. So that's what I really want to be focusing on as an operation and a management team going forward. The key thing to note here is that we spent the whole of this year cleaning up this company, cleaning up the balance sheet, and bringing in a completely new team. So I'll introduce the directors and the management in a little bit. But the key thing that really you need to know is that nothing went wrong for the old Navarre in Victoria. Something went wrong, completely wrong in Queensland. And that's not part of our company going forward. And we've left behind that asset. We've left behind all the debts. So we're completely debt-free as we embark on our exploration plan right now. And we've done this at an extremely attractive valuation. So the people that I was working with from the start of this year, as we secured these assets and got hold of this listed company, we wanted to recapitalize this at a very modest valuation so that those who buy shares now and those that have backed us in the last few months we've got a very good chance of succeeding economically and providing a good return for shareholders as we go forward. So I might just step back a couple of slides, if you don't mind. Keep going back. Yeah. Okay. As you can see from the top of this slide, and as I described a little bit there, we have completely restructured for success. So instead of having billions of shares on issue, we've only got around 100 million shares on issue. As you can see in Josh's presentation at the start of the day, thanks for that personal support there, Josh, and participating in our capital raise that we completed last month at 10 cents a share. So we raised $6 million then, and that got us back onto the ASX and the resumption of trade, which was really the capstone of the work that we've done this year. And it's great even yesterday to be out on site and lining up the drill rigs and getting everyone organised so that we are commencing trading. If you look at our share register and our share structure, it is quite a bit neater. The key things I think that you need to take away is that we have a very, very strong cornerstone shareholder at around 10%, Dunkeld Pastoral. Dunkeld is backed by an ultra high net worth individual who lives in regional Victoria, and he's a heavy investor in regional Victoria. And he's very excited to be working with us, both in the west of Victoria and also over in the east in Victoria as we work with our project partner there. So it's excellent to have that cornerstone backing and a very long-term shareholder going forward, which is great with Dunkeld Pastoral. Also, you will note that the board and management own around 6.5%, which is terrific. And that's come through putting in cold hard cash, put in about 300K myself. So we're right alongside our shareholders and those that buy our shares, which I think is a key point as we restart this company. And also we've introduced some small institutions, which is fantastic. So SG Hiscock, Technical Investing, Series Capital, and Dixon Trust are all early investors as we get this company going again. Key thing as we look at the number of shares, as I said, we've only got around 100 million shares at the moment. At the start of the year, there was over 1.5 billion. People might observe this week that I think any overhang that we had from the very large number of shareholders has really cleared away in recent days. So we have seen the share price progress up a little bit from when we printed this presentation. It's sitting at around 14 cents. And the market cap around $14 million or $15 million, which is okay. But remember, on the assets that we had, this company traded at well over $100 million back in 2020 and 2021, just on these Victorian exploration assets that we do have. As I did mention, our cash at bank at the moment is around $5.5 million, which is great. So we're well funded as we commence the exploration program that I look forward to taking you through. So next slide, please. A little bit about the team. So these are new faces and new people. We've moved on from the previous team, and I've been working on this for about a year now. And my experience really does come out of being in banking and mining banking for the last 20 odd years, Credit Suisse, Deutsche Bank, and more recently at Pat Partner Securities, where I came across this opportunity. Importantly, as we embarked on the opportunity, I really looked to Victoria and thought, right, what's best in class as we go forward? And at that stage, I really was working with Richard Taylor, and Richard's been a terrific sounding board for me as I've been in the executive role and going forward. But we looked around Victoria and said, really, what's the best thing going on about Victoria and gold and exploration at the moment? And as we know, Southern Cross has been a terrific success story for Victoria and the discoveries that they have had. And I had some recommendations from people connected with Southern Cross and investors in Southern Cross to bring in Angela Lorrigan as our technical director. She's a non-executive director. She's had a lot of experience down there in Tasmania that we just heard about, particularly with the Henty mine and other mines. But for the last 3 years, Angela has been a permanent consultant to Southern Cross. and she's made a terrific contribution in recent months as she's come on board as our non-executive director. So it's great to bring in that expertise and really lean into some of that success that we've seen elsewhere here in Victoria. Continuing that theme, as we've got Kenneth Bush, he is the exploration manager at Southern Cross. He's not a non-executive director of ours. We'll get that corrected actually, but he's a consultant to us on our exploration strategy, and it's Kenneth's exploration plan that we are embarking on over the next 12 to 18 months. Importantly, you know, Kenneth's had a lot of success there at Southern Cross. He's given us a continuous exploration plan to really grow our resources. And who's implementing that? It's Peter de Vries. He's on the ground. He's out there today. And he has had a lot of experience here in Victoria at East 79 and at other operations. So it's a completely new team as we go forward, which is exciting. So next slide, please. We might skip through this one. Great. So as I've mentioned a couple of times, we're about to kick off our exploration program for the first time in a couple of years here in Victoria. We are quite lucky that we secured all 20-odd tenements that the old company, none of them had expired. And really, we bought them in good standing, and we've really worked hard to secure everything that the old team sort of left when they put the tools down in Victoria. We will have a 12 to 18-month exploration plan kicking off in the coming days. And that's a 7,000-metre program, 7,000 metres of diamond drilling, that is. We've got some air core and other activities also taking place. And importantly, we're focusing on our most valuable and already most advanced assets, which is the Irvine project within that Stawell corridor, 20 kilometres from the Stawell gold mine. That's where we've got the JORC resource and the exploration target, and we will be wanting to graduate that up into the next level. Sometime later, mid to late 2025, hopefully we can revise those numbers around the JORC resource. We'll be doing both some extension drilling and some infill drilling to shore up those JORC numbers. Importantly too, alongside that, we'll be working on our other most valuable project, the Tandara joint venture in Bendigo. That's about to kick off drilling again. The joint venture partners, we all agreed on a program a few weeks ago, which is fantastic. And we're just working to get the drill rigs into place right now. So they would have loved to have started a week or two ago, but we have had a lot of rain, I think, in that region. But everything is about to commence, which is fantastic. Towards the bottom, you can see we've got plenty of other projects, but really the key thing is that we're focusing on our most valuable projects as we get going again. So we might progress to the next slide. This is another project summary, and please do read through it at your own leisure. The key things that I take out of this slide really are the bottom two rows, where our planned expenditure program, the good thing about raising that $6 million that we did in the last couple of months is that all of that money is going into the ground. So none of it has gone to pay off any debts. Any debts that the company had were rolled into shares, and we've cleaned up the register, which is great. But we're really applying that, and we're giving our investors really bang for their buck. The program that we have around the Irvine project is going to cost around $2 million. At Tandara, at the moment, we've got a $1 million project in total. Our share is about half that. And up at Santana, which is a whole gold field that we have there, we'll be investing about $1.3 million through diamond and air core drilling over the coming 12 to 18 months, as I said, and a little bit for Jubilee. Importantly, our program has been sized for around $4 million, and we do have a little bit of spare capital to bring in additional rigs and activity as the drill results speak to us throughout 2025. So please watch that space as we bring exploration results and assays out to the market. Should and hopefully as we extend and build on that success that the previous team had here in Victoria. And speaking of the previous team, you can actually see that The capitalized exploration on our balance sheet, which is a bit of an indication of what has been spent to advance these projects up to their current state. It's around $33 million. So our market cap's around half that at the moment. I know you can't put a lot on those numbers, and they are historical, but really it's just to indicate that there's nothing greenfield here. These are proper projects. They're proven discoveries, and we're looking to grow and advance on what we've picked up. Across to the next slide, please. This is really the value slide for us, and where this is our key project at the Irvine project just south of Stawell. So remember, it's made up of two lodes, the Resolution lode and the Adventure lode. And initially, over the coming weeks, we'll be targeting at Resolution the down dip extension, really drilling into that orange section that you can see here on the graphical representation as we chase those high-grade shoots down lower. And I think we really look forward to commencing that in the coming days. Resolution will be the key focus for us at the moment, and you can see that represents the bulk of the resource that we do have at the moment. So it's a good sized resource, 3.9 million tonnes at 2.43 grams, and that what gives us our 304,000 ounces, which is great. And the exploration target, as I mentioned before, importantly, it's over the same lodes and the same projects in the same areas. So we'll be drilling that exploration target, bringing that into the JORC resource, and also as we do some infill targeted drilling at the Resolution project later in 2025, we'll look to also upgrade the categories we've got in the JORC resource so that we can start to plan towards project assessment and project development in the back half of perhaps 2025. Next slide, please. This is a good indication of some of the ground that we have to work with. This is Crown land, a bit of a Parks Victoria managed area. This is the Santana gold project and the Comstock pit. So that's some ground that we will be drilling sometime later in the first quarter of next year. And a good representation of some of the ground that we do have to work with within our project portfolio. Next slide, please. Within the Stawell corridor, we do have a couple of other discoveries that the previous team made. Our resource and the key project is at Resolution and Adventure. As you can see, just 20 kilometres up the road, there's the privately owned but operating Stawell Gold Mine. We participated in a presentation with those guys 2 weeks ago, which was fantastic to get some news out about the Stawell Gold Mine and its success and the couple of hundred jobs that it does provide to the Stawell community. And really one of the things that investors took away from that presentation is that Stawell is looking to really shore up the future of the feed for that gold mine. And as we get back into business, we really are looking to cooperate with the operators in the area. So we look forward to advancing our project, growing the resource, growing the size, trying to increase that grade that we've got, that 2.4 grams. We would like to see that get a lot higher as we go deeper. And that's our task over the coming 12 to 18 months. But as you can appreciate from our tenement area there, as you can see, as it goes south, it goes through the Lange-Logan discovery. And all this gold appears on the edges of these basalt domes. And we've got 6 or 7 of those basalt domes there to further explore as we go. And we've already been doing in the field some geophysics to further help us define exactly where those basalt domes are, and have a look for any potential new target areas for new discoveries that we might be able to add on to our portfolio within this Stawell corridor. But what people really do need to appreciate is that it's potentially camp scale there in the size of the tenement package that we have. We do have Morning Bill just there off to the west, which is our version of Staveley Minerals, copper, gold, silver, lead, and that's a project that we will advance in due course. Nothing planned on it at the moment because those systems can be quite complex. We might just skip through to the next slide. Tandara, the key thing about Tandara is that it's only 50 kilometers from the Fosterville gold mine, and that's why Agnico were until recently a 10% shareholder in our company. We continue to have and enjoy a great relationship with Agnico and cooperate with them in general. A good dialogue going between our companies at the moment because, as everyone would appreciate, Agnico really do have an interest in anything that is within that hinterland of the Fosterville gold mine, and wondering about the long-term future of that operation. As you can see, the Four Eagles project adjoins our Tandara gold project that we've highlighted there. Four Eagles hosts a very high-grade sub-resource, 70,000 tonnes at 26 grams per tonne. And there's a current application in there for an exploration drill drive at the Four Eagles project. And we've seen a couple of approvals here in Victoria this week, and I am hopeful over the medium term that that Four Eagles project does advance as well, because as you can see, it adjoins onto our ground there at Tandara, and I think we would see a respective benefit also from a ramp up of activity and any sort of medium-term development that we get at the Four Eagles project. We have delivered some high-grade results, even when the company was in suspension earlier in the year. In August, we were able to bring out these results for the Tandara Gold Project that we contributed to, even when the company was on the sidelines. And it gave us great encouragement to continue drilling at Tandara, given there's multiple levels of gold that we're seeing. It is quite akin to the mineralization system that we see at Bendigo, and giving us decent results. So as I've mentioned a couple of times, we are drilling both at Irvine and at Tandara in January. And so we look forward to reporting back to investors very soon as to the progress that we're making here, which is fantastic. Just a bit more of appreciation of the whole Tandara system, which is great. It is quite sizable. It's got a lot of potential. Moving through now. Santana, as I showed you in that photo before, the Comstock pit, you can see it up there within this map. But what people really need to take away from this is that just prior to going into administration back in 2021 and 2022, the company was able to consolidate this whole gold field. So we've got a lot to work with from not only that Comstock pit that remains in the state that we saw, but as we trace these at least 3 lines of mineralization. We're using all the advanced exploration technology that we can. We'll be doing air core to penetrate through the shallow cover that we see here, as well as popping those diamond drill holes in around the Comstock pit. So there's a lot of work to do here at Santana as we go forward, and it does have the potential to deliver quite significant results. You can see there was one back in 2008 of a meter at over 1,000 grams per tonne. So fingers crossed for more results like that, but we look forward to getting back into the field and delivering that. There's a lot to work with. The old team did report some visible gold back in 2021 at Santana, and as I've mentioned, there's plenty of old shafts and old workings to go through there. So a lot of potential here in Victoria, and we will be working very hard with all that cash that we've recently banked and the new team on board. And as I mentioned, we're really getting into this drill program. We'll be lucky to get something done before Christmas, but essentially in the first couple of weeks of January, the contractors will be back out on site and commencing that diamond drilling at the Stall Corridor and Tandara. And also the good thing about our projects, our own operated projects in the west there, is that we can ensure that we have at least one drill rig operating all the time, so that at Stall, if we're ever waiting on assay results or whatnot, we can send that drill rig up to Santana and it can do the 1,200 meters of diamond drilling that we've got planned there around that Comstock pit. And then we can bring the drill rig back down into the Stall corridor to continue on after we've made the assessments and appreciated the results that would have come through. So 2025 looks to be very well set up for us, given that we've got the cash in the bank, we've got the team out there on the ground right now setting things up to commence the drilling in the coming days. And we've done a lot of work this year, restructuring, recapitalizing, getting the new team in place, and bringing this new name, ticker, and image to the floor and to investors. So if we tick over to the next slide, just a reminder of our key attributes. We've got that over 700,000 ounces of resource potential. It's pretty good for a market cap that we do currently have. Our projects are advanced. They are proximate to operating mines, which is fantastic. We've got plenty of upside as we go forward, and it's a new team. So if people do have any questions, please let David know. Log into our investor hub so that you can sign up and get updates from us as we go forward. So that's the crux of my presentation, David, and look forward to hearing any questions that we might have.
Thanks, James. A great presentation. Clearly, a lot of work has gone in to recapitalize the company, bring it back to the ASX in a well-funded, strategic, focused way. So first of all, congratulations on that. Really only have time for one question. News flow. What are the key catalysts? You showed the plan there before, but what should investors be really focusing on for 2025?
The key thing that we want to be delivering is continuous drilling, right? So we're going to start up, particularly in the West, with that one drill rig and keep that operating throughout the whole of 2025. Previously, the team had access here, there, and everywhere, but because we're balancing between our different projects, and because Santana and particularly Jubilee have a lot of Crown land there, we'll be able to access those projects if and as we want, which means that if there's a pause in drilling around Stall or elsewhere, we'll be able to move that drill rig between the different projects. So I think the key thing for us is to get back on the Lassonde curve and continue to deliver results to the market. And people might appreciate that we had a very high market cap previously, over 100 million, and to get anywhere near that, we really do have to show continuous results, good results, continuous updates. And we will be working also at the corporate level to optimize the portfolio as we go forward. And we're keeping the board lean and mean, but also just we are talking to a couple of people that are interested also in joining us, which is great. So there's plenty of news flow lined up as we go into 2025.
Thanks, James. Great presentation. Clearly a company to watch into 2025. The hard work's been done in 24. Hopefully you reap the rewards in 25. Thank you very much for your time.
Thanks, David.
Now I'd like to introduce Sam Smith, Executive Director at Santana Minerals, ASX code SMI. Santana is much more than a cool name. They have discovered the most significant single gold deposit in New Zealand in over 4 decades at the Bendigo Ophir project in central Otago. Welcome, Sam. We look forward to hearing the story.
Thanks, David. This will be the quickest presentation you've ever seen. Yes, so this high-grade, high-margin discovery in New Zealand has been officially named as a project of national and regional significance in a upcoming law, the Fast Track Approvals Bill, which should come in to be ratified as a law before the end of the year, which names us in the bill and prioritises us towards fast track permitting. So that's all very exciting for us. Next slide, thanks, David. So I'll race through this presentation and just show you the location, show you why everybody's excited about this discovery, and tell you a bit about the economics of our pre-feasibility study that we published 3 weeks ago and where we're heading with this. So it's on the South Island of New Zealand, 1 hour east of an international airport at Queenstown. So it makes us very accessible, and we're about 90 kilometres away from the famous Macraes gold mine, remembering that New Zealand only has 2 commercial scale gold mines, both owned by the same company, Oceana Gold. So for us to be number 3 is very, very important from a country perspective in terms of taxes and royalties. Next slide, please. So zooming into the tenement package, you see that tenement shape in the bottom right-hand corner of the screen, that green shape there. The little red square that you're looking at is that project area. So on about 10% of the broader tenure, we've made 4 discoveries. The main one is certainly Rise and Shine. That's the one in the middle there, the big shape. There's 2.2 million ounces at 2.2 grams per tonne at Rise and Shine, now with a probable ore reserve of 1.15 million ounces on the back of that PFS. The 3 other satellite deposits are smaller and may have a meaningful input in terms of early throughput into the mill. And we've just drilled those to indicated. So, but certainly the main event is Rise and Shine. Next slide, please. Zooming into that discovery, this is it, plan view, looking down. The purple dots and the red dots through the axis there are the very high-grade intercepts, gram meters over 100. There's now even a higher grade core of gram meters over 200. Every hole that we put into the high-grade core here is between 30 and 40 meters thick at grades up to sort of 10 grams per tonne. So it's a really well-defined ore body. I'm going to slice it at cross-section A on the next slide, just so you can see how thick this is. And so this is what makes it work. The intercepts on the right-hand side of that deposit and the halo that you see up to 40 meters thick. The last hole we put into this was 42 meters at 8.5 grams per tonne. Some older holes there, 40 meters at 4 and 40 meters at 10. And it's just the consistency of this thing that makes it work. If you step forward a slide, cross-section B, the shape is still there, a little bit narrower, but still 25 meters thick. Step forward again on the next slide to cross-section C, and we just see that the shape is continuous. So very thick. Well, it's 150 meters wide, the high-grade core, and again up to 40 meters, and narrowing down to about 25 meters at this section as we go deeper underground. And this will be the underground portion of the exercise. Stepping forward, please. This is what it looks like in long section. Just gives you a good idea of the continuity of it. It goes down plunge. It gets pretty deep under the TZ3, the grey rock that you see there on top. Our mineralisation is in the TZ4 schist, the darker grey, and that TZ3, the light grey rock, sort of gives you an idea of how this will be mined. There's a pre-strip at the upper open pitable section to the right-hand side, and as we move to the south, it dips underground. To the north, it dips deeper underground, and we haven't been able to drill that. We've extended the continuity of the core, but it's getting 600 meters deep, so we haven't actually sprayed it with drill holes to get that portion indicated. That'll happen in the future. Next slide, please. That's what it looks like in real life, sheep and beef country, private freehold farmland, agreements in place to mine as well. The farmers are very incentivized, as you can imagine. Looking forward to this thing getting up and running, hopefully in the middle of next year. Shepherd's Creek is where all of our infrastructure will be. Rise and Shine Valley on the right-hand side is where all of our discoveries have been made. That's the Thompson Gorge fault line, and it is a pathfinder structurally to all of our deposits, and it transects the entire tenure. So there's plenty of discovery upside. Next slide, please. Locally, this is where it sits. This is super important because it's an area that's blessed with infrastructure. We have fresh water, plenty of fresh water for processing, renewable, cheap hydropower fed by the Clyde Dam into the national grid. We will take that at an exit point about 8 kilometres from the mine. There's a 66 kV substation there that Aurora Energy will wire in for us to energise the mine. And the town of Cromwell, 25 minutes away, up a bitumen state highway to get to work. That's where our workforce will reside largely. There's also the town of Wanaka to the north, Alexandra to the south, 30,000 sort of people catchment area that most of our employees, and some of those people are already servicing Macraes and driving 90 kilometres in a drive-in, drive-out scenario. So our employees will be able to sleep in their own beds at night. It'll be a residential mine. There won't be any FIFO, any major camps, airstrips, flights, accommodation, catering contracts. So it all feeds into a cheaper cost of production. Next slide, please. And that's what we saw in the pre-feasibility study that we released 3 weeks ago, is a very high-grade, thick, high-margin project that is nationally significant to the country. And we've been officially named in that vein in this fast-track approvals bill. NPV over $1 billion, IRR 68% and under a year payback from production. A CapEx bill of 340 mil maximum cash drawdown, and a huge chunk of that is that pre-strip that we will try and move as quickly as possible. Next slide, please. This is just the proposed mine layout. I won't go into this in any meaningful way, but it's the first time we've been able to reveal what this will look like. All of the infrastructure in Shepherd's Creek hidden away from the local community, which is good. Next slide, please. Just some highlights of the pre-feasibility study. So 9.5 years of production, 8 years of mining in the Rise and Shine open pit, with 1 year coming from one of the satellite pits at the back end. 6 years underground, that comes in year 3, with ounces coming in year 4, and you know, there'll be a life underground. There's still 300,000 ounces down plunge and another sort of 300,000 or 400,000 ounces to the western side. So there's actually 700,000 ounces of inferred material that we haven't brought into this study because it hasn't been drilled to indicated. But as you saw with the dip, this thing will just keep going underground. 125,000 ounces on average per annum over that 9 and a bit year life, pulling out 1.15 million ounces of gold at an all-in sustaining cost of $1,416 an ounce, cheap. And again, $340 million maximum cash drawdown. Next slide, please. The graph on the bottom right-hand side just shows you what those cash flow profiles look like. So those first 2 years, it's actually about 20 months of pre-production activities. We draw down the $340 million, and then in year 1, you see there $341 million cash positive. So we pay it back in the first year of production. The rest of it is free cash flow, and it totals up to about $1.8 billion of free cash flow over the initial 9 years, with plenty more to go after that. Next slide, please. The ounce profile, this was important because in the scoping study, we had it down at around 115,000 ounces per annum. We pulled as many ounces forward as possible, which wasn't hard because the high-grade core is so high-grade that we've had to cap the grade into the head grade into the process plant at 3.5 grams per tonne. This thing in stage 1 wants to be mined at 4 grams per tonne, and it fluctuates month by month of grades much higher than that. So there's a blending and stockpiling process happening in the background just to keep some steadiness through the plant. Obviously, process plants like consistency of grade and throughput. So you see there, we've managed to get 150,000 ounces on average in the first 3 years. Again, 125 on average over the 9 years, but we've brought lots of ounces forward since the scoping study. The yellow part of those bars is the underground coming in. So that's fully ramped up in year 5. And then we upgrade the size of the process plant in year 6. That's why there's that spike there, more or less, to 2.1 million tonnes per annum. It starts off at 1.5. And that's to deal with some of the lower grade material that we're actually stockpiling as we concentrate on feeding the higher grades through the plant. Next slide, please. And the open pit, again, it's 9 years, including that satellite at the end there, pulling out 1 million ounces. Truck and shovel exercise, 250-tonne excavators, 140-tonne trucks, done in 5 stages. Stage 1, again, pulling out 4 grams per tonne on average over the whole 8 years at well, including Shreks. The satellite, 2.2 grams per tonne, which is good grades. The strip ratio is getting up there at 12.5 to 1 operating strip ratio. That's post the pre-strip. We'll try and get that down as we dial in our next round of studies, as we get our geotech tested for the pit wall angles. Next slide, please. Then it goes underground, and we are talking twin portals coming out of Shepherd's Creek, so no interaction with the open pit because it starts, the actual development starts in year 2, so that's important. Also goes straight into the more competent rock. It's a long hole open stoping and paste backfill mining method, and we're pulling 230,000 ounces in the initial 6 years. And then, as I said, there's still 300,000 ounces down plunge that just haven't been drilled. But once we get the platforms down there to drill it, we'll drill it into indicated, and that'll be the life of RaaS as we go off looking for another Rise and Shine. We call it RaaS on the broader tenure. That's that slide. Next slide, thanks. Processing plant. All of our gold is free milling. Ore is free milling. That's important, and we quite often get asked that question because over at Macraes, it's mostly refractory. So we have a very simple single-stage crush, single-stage SAG mill. We do add a ball mill in year 6, as I said, as we ramp it up to 2.1 million tonnes per annum. But it starts off at 1.5, and we're getting 93% recoveries, just shy of 93% recoveries. So very simple metallurgy. Next slide, please. But this is the thing that is probably the most exciting thing that's happened to the company since the discovery. 1 year ago, there was a change of government. They were governed by the Ardern Labor government, which was had a sort of green bent to it. In came the coalition, and the first port of call was to roll out a economic reform called the Fast Track Approvals Bill. They ran around the country looking for projects of national significance, not just in the resources space, but in the resources space, we were one of the most significant finds, and to the point where we've now been listed inside of this bill, which should be ratified by the end of the year, which will give us prioritised eligibility to apply. And there was some more data on that came out today, saying that there certainly will be some projects that are actually forced through this process first. And I think we'll be one of them, because again, this is a country that only has 2 other commercial scale gold mines. And so, as you can see from the economics, now this thing will tip in over $1 billion in taxes and royalties to the government. And that's obviously not including the multiplier effect of all of the jobs and the infrastructure and the businesses that will pop up around the town of Cromwell because of this project. So we could be sitting here in about 8 months' time. We'll submit in around February this next year we'll apply into the process, and the time bar that they're telling us is a 6-month permitting timeframe, where they bring in all of the acts into a one-stop shop and assess it under the review of an expert panel with very strict time bars on giving us an answer. So February application and July we'll have an answer, and that's it. Next slide, please. That's exactly what we're preparing for in our timeline. You can go through this in your own time, but essentially we apply in February, come out in July without permit. And in the meantime, while we're waiting for that, detailed engineering, banking, financing, already talking to the banks, all interested, because it's gold, it's New Zealand, low risk. And so there's a strong appetite there. So we'll go through all of that process in parallel, and then we'll get on the ground with a local contractor for pioneering work in some of the hilly country, making room for the process plant engineer and the big gear for the mining contractor to come in, do the pre-strip, and start pouring gold at the end of 2026. Next slide, please. Final slide. No, it's not. Second last slide. Got the team to do it. Peter Cook built Westgold, built Metals X, done it all before, built numerous gold developments. Damien Spring, our CEO, lives local to the project. Perfect. He permitted the last 3 mines in New Zealand under the Ardern government, and they were all coal mines. So this should be far simpler under the fast track approvals law. Kim Bunting discovered Rise and Shine. What a legend. He's on our board, and he's a very hard worker. Myself, mining engineer with a strong background in contract mining, actually. I'm on the board and also responsible for corporate. And Craig, our CFO. Plenty of cash in the bank, about 30 million. 30 million coming in bonus options in February, which are in the money at the moment, exercisable at 36 cents. So if everyone exercises, another 30 million comes in, because we're at 47 cents today. And we are sorely undervalued. We're about 80 cents about 3 months ago. So our task is closing that value gap back up. If you go to the next slide, which I think we will, we are moving straight to detailed engineering and construction on the back of this PFS. We are talking to banks at the moment. We're dialing in the mining engineering metrics. Again, we're trying to get that strip ratio down a little bit. We'll try and get the capex down a bit. But what we are looking at, this is a project underpinned by a thick, wide, long, high-grade deposit that is nationally significant and has been named so, with stellar financial returns or projections from the PFS. So we are just super busy trying to get this into production now and getting our mining permits starting February. So, companies that have assets or deposits like this that already have a mining permit and a processing plant have market caps. Go check it. You know who our peers would be if we were in production, of $1.5 to $2 billion and above. So there's a huge value gap to close here. And the big reservation's been about permitting. The quality of the discovery has never been in dispute. And we are weeks away from ratification of this bill, which we've already been named in. So that value gap, I think, will close rapidly between now and the next few months. Thank you.
Thanks, Sam. Great presentation. 2 of my favourite things, New Zealand and gold. So can't get any better than that. The only thing better than that really are the grade and the economics. So congratulations to everyone concerned on delivering a genuinely world-class project. Now, question here, did the results from exploration, which really uncovered this project, meet or beat expectations?
The results from the exploration drilling.
Sort of the work that helped you to define and identify this project. You know, when people go into the field looking.
The history of this project was Kim Bunting, the director I alluded to before, was prospecting in the Rise and Shine Valley, trying to build a low-grade heap leach, and was able to raise through the vend of the project into Santana, which was a shell in 2020, was able to raise $7 million and put a drill rig up on that TZ3 grey rock that I showed you, which is our pre-strip, and drilled through 120 metres of blind cover and discovered this in 2021. And I guess like most holes, I think it was 40 metres at 2 grams per tonne, the market didn't get too excited until they followed it up hole after hole after hole and put out their initial maiden resource, which has been dialed into higher levels of accuracy and confidence up until July this year, which gave us 1.4 million ounces of indicated material to wrap the study around. So it just keeps beating expectations in terms of the definition around Rise and Shine. It is a world-class deposit of its scale. I mean, there's 2.2 million ounces there. We hopefully we find another one. I think we will. And then the whole reason that he drilled where he drilled up on that hill was there was a theory that these deposits that outcrop in Rise and Shine Valley trended to the north, similar to Macrae's deposits along the same regional structures. So he followed that hypothesis and hit this. We are now drilling those smaller deposits in a northerly direction as well, but it's expensive once you get up on the hill. But we're fairly well convinced that we'll find something else in the meantime. But getting this into production is the focus because the returns are fantastic. And as you know, good discoveries like this don't go away after the initial term. They just keep getting mined, get deeper.
So just on that, given the size, scale of the project, and as you've touched on, the extremely positive financial numbers, do you get approaches? Do companies start knocking on the door going, this is a world-class project, and you've got it to a point where it is ready to move into that production phase? Do people start knocking on the door, and how do you actually protect yourself from opportunistic advances?
Yes, they do start knocking on the door. And since I started at this company, I mentioned before, it's never been in dispute, the quality. And obviously, in many ways, I'm as curious. Obviously, I'm closer to it, but curious as others to see where this goes, because my peers in the industry who are running, producing mines in Western Australia, you know who they are, have all said to me at conferences, mate, great project. I've not heard anyone really tear it down yet. The pre-strip is big. It's the only cost challenge that we have on the project. The material, the TZ3 and TZ4 is fairly friable, so the wall angles are a little bit flatter than we would otherwise want them to be, and we'll actually do a bit of work around that as we dial in our DFS. But that's one thing that. So yeah, other competitors have knocked on the door and told us that they love it. We are not an institutionalized register, which probably makes it a little bit harder to run around behind us and try and get pre-bid agreements and get some and try and take us out in a hostile nature. And nobody wants to do anything hard like that these days. There's always a conversation with the board. This is severely undervalued now. It's a great buying opportunity. It really is. Again, we were sort of around 80 cents 3 months ago, and I think actually, this PFS for us, it's not really a marketing document. It's a course of action to get it into production. There's more work to do. We need greater levels of accuracy for banks. But how do we protect ourselves? Well, our shareholders, by and large, are the individuals who vended this project to Santana in 2020. And these guys won't even sell shares, so that they probably want more, and they want to get the right value for it. So once we get it, look, if somebody comes along, once we've got this back to its the right valuation, and wants to look at some sort of way forward for this, we'll whatever makes sense for shareholders. And we saw that I worked with Peter Cook at Director Resources, and some of you may have been close to that transaction. We sold that into Ramelius on a full scrip deal, and then Ramelius went from $1.15 to $2.50 within 6 months. So our shareholders, anyone that believed in that story and held, were very, very happy. So there's ways to run the value even higher if you are to find some sort of marriage with another competitor. But at this stage, we just want to get this permitted. We want to get the right amount of value back into the stock where it was or beyond 3 months ago, and will become more attractive as we move forward, or hopefully less attractive. To be honest, I want this to be the less attractive project that our competitors see, which would mean we'll have to build it ourselves.
Now, clearly focused on permitting, development, production. How much exploration upside do you think exists at the project?
Heaps. The nature of the beast is when you make a discovery like this, a lot of your resources do focus on drilling it out. So you can imagine you've got 3 rigs out there, you make the discovery, then they all sit on top of this thing for a couple of years, drilling it to indicate it. And then you're going through all the normal, met testing to make sure the deposit the gold can be liberated, all of that kind of stuff. So there is a bit of a tendency to focus on a discovery of this nature. We have now just onboarded a new geology manager, and part of that is about rolling out a regional exploration program. There's plenty of targets, and you might remember that image. The project area is just a tiny bit of the 30-kilometre strike length tenure, so what I didn't tell you is that the Rise and Shine, I sort of alluded to it, but the Rise and Shine fault line, or the Thompson Gorge fault line, transects the entire tenure. So it is a structural pathfinder, and we obviously it comes with the administrational things like landholder agreements, and we have them with the landholders where our major deposits are. And we will continue pushing those forward. So yeah, there's a regional exploration program happening in the background, and we put an announcement out 2 weeks ago about some interesting intercepts between our deposits. So still in that little area where we were trying to sterilise, and we went through 20 metres of mineralised alteration. So it looks a bit like an edge of another deposit. We just have to keep stepping out, but it's happening in the background.
Well, clearly exciting times ahead for Santana and its shareholders. Sam, thanks for your time.
Thanks, David.
Excuse me. I'd now like to bring back each of our presenters, and I do note one has dropped off, but bring back each of our presenters and Josh to have a bit of a broader conversation about gold and the gold sector and where we think, or they think, the sector is headed from here. So, Josh, maybe a question from you to get started. I think we've got Josh here. Yeah. We've seen a lot of analysts compare the outlook between gold and copper, which are both very favourable at the moment. What makes gold a winner, in your opinion?
I assume it'll be on a go-forward basis. When I look at commodities, I always try and find what the drivers are and whether you have more tailwinds or headwinds at a point in time, and whether you're getting increasing tailwinds versus headwinds. And I think for gold, a lot of the things that have driven it in the last year aren't really going away. Maybe near terms there's some resolution of war-related geopolitical, but geopolitics seems to be not getting better. Central bank buying, flows into the sector, sentiment just seem to be positive, and it's not clear what might stop it. Maybe from one concept of a potential headwind would be, if you think about it from more of a conventional fundamental commodity analysis, where you think about price curves and points and marginal production. Now that we're seeing marginal producers start to make strong cash flows, that might be a sign that things might be a bit more muted going forward from an upside perspective. Maybe it increases volatility because there's less of a fundamental floor at the moment. And I mean, what you see in WA is a lot of these small-scale mining campaigns, which, despite probably having real all-in costs of 2,500 to 3,000 Aussie, maybe more in certain cases, they're getting up. There's a lot of activity, joint venturing with contractors that will get these small deposits through mills, producing gold. So that's generally what you see when the prices are very, very, very strong, and probably concept of a headwind for gold. But I think going forward, it's generally more supportive, more likely to see the price continue rising than probably not rising, but definitely in a stage where we might see a bit more volatility in that rise than what we've seen over the last 12 months.
And Neil, I completely acknowledge that each of our presenters are all in gold, so they're going to be very favourable to gold and their views on gold. But Neil, why gold?
Yeah, look, I think to add what Josh has said, there's a lot of sentiment around fiat currencies, and governments have been notorious over the last decade or so of printing way too much money to fund government strategies. So I think there's appetite and interest in gold, as a way of de-risking around currencies. So look, my view is that gold will continue to perform at these levels. I did call it earlier this year that I thought gold was going to have a good year, and it had a better year than I anticipated. I think we'll have a steady period over the next, as far as gold price is concerned, over the next 12 months probably. What happens in the US has got a lot of people sort of a lot of uncertainty, and that's always a good thing for gold. So I think it'll. I don't see it coming off any time in a hurry at the moment.
And Nick, just on that, do you think gold has had a great run, a stellar run? We're at record levels. Do you think there's much more room to go?
Yeah, I do think there is. I agree with Josh and Neil very much that the broad underlying fundamentals haven't changed. That said, we need to remember that the selling, production side of gold is pretty constant, right? So it's really very demand driven, and demand is often sentiment based. So it's very difficult to tell where central banks will move. They're either sort of on or off, and they've got an order, right? So they'll have been told, somebody in one of their central banks will have been told buy this many tons, and they're somewhat priced agnostic. And the other thing to remember with Aussie gold now, say at 41.50 thereabouts, we're now seeing percentage moves make much more of a difference. So a 10% move at 1800 would have been $180, right? But now a 10% move is now only $400 bucks, right? So it's very, very big swings in absolute dollars terms. So I think part of that plays into investor sentiment and volatility, but I do believe the broad trend is up. But to see a 10% pullback and then go again would be unremarkable in market trend history, but that would feel more than normal now, because that would be $400 in absolute dollars in people's minds. No, I don't see it going anywhere, and I see that we're in a broad bullish trend still.
And Sam, do you share that view? Where do you think gold could go from here?
I have no idea, because interest rates have been super high for the last, year or something, and the gold price keeps going up. So those two things are normally unrelated, and now they're talking about central banks cutting rates. I think Bank of Canada and European Central Bank did that, and maybe that's why the gold price has gone up a bit, because of the holding costs associated with gold. So I'm not an economist, and I don't really know. And if I listen to my friend who is a bit of a conspiracy theorist, with talking about the manipulation of gold price by central banks and all sorts, you can quickly disappear up yourself by trying to figure it out. But I think with the wars that are going on, obviously that level of instability, and it just keeps getting more intense with what's happening in the Middle East. We thought the Ukraine-Russia situation was bad, but it seems to be intensifying now. So maybe that's part of it, because the fundamental economics of the high interest rates and with gold going up sort of didn't make a lot of sense to me. Obviously, inflation rates were high too, so it's about normal interest rates, but hard to figure out. Obviously, if we knew, we're bullish. I mean, the reason I like gold is because there is at least some level of consistency decade after. Well, I guess in the 90s, people would probably refute that, but in the last sort of 10 years, at least there's some consistency as you go down the continuum right down to the boutique metals, where it seems to be sort of super boom, super bust, with things like copper and iron ore somewhere in between. For me, there's that consistency that it's a tier one asset, and has always been, and probably will always be. Nervous about Bitcoin at 100,000, but yeah, who knows?
And Josh, M&A, we're seeing it start to rear its head. There was a period there where there was nothing. It there was sort of no M&A really happening in the gold space. And if it was sort of really just little bits on the edges. But we're starting to see some bigger M&A deals happening and some bigger interest from a number of players in that M&A space, both private equity and actual developers in their own right. Do we think that's going to be a trend that continues over the next 12 to 18 months?
I mean, if the gold price stays where it is, people are making, or companies are generating strong margins, and the value of scrip goes up, then I think all else equal, logic dictates that M&A should accelerate as well, and you might see a lot more bigger groups picking up smaller groups, because there is still that big divergence. So whilst these late stage developers are performing strongly, marginal producers are performing strongly, there is a potential for them to add and bolt on over time as well. So whilst outside of maybe Northern Star and De Grey, I guess the West Gold merger with Karora, there hasn't been a lot of big M&A. There definitely has been smaller M&A, so selling ounces to producers rather than doing small scale campaigns. We've seen that, but probably hasn't been as much as people might have thought. But I think it just takes time. So if you've got your share price up, you're generating cash flow, you've spent a lot of money to get there, etc., you might want to see that happen for a bit longer before you start throwing script around or paying out cash for acquisitions as well. So I think there will be more to come, all else equal.
Nic, probably a question for you. Everything Josh just said, you've ticked that box. Cash flow positive, spent the money, going to reap the rewards, if you like, of record gold prices. Do you, and I know the question was asked previously, but do you look at M&A? Do you look at, hey, this company looks a bit cheap, we know we've got a skill set that can add? Do you start lifting the eyes a little bit and start looking around?
Oh, absolutely. I think management teams do that all the time, even when they're in a development phase. Because it's just a normal part of corporate activity about how can you create value. I mean, one of the things to remember is the gold mining market is very small in the global scale of markets, right? It's big to us because we're in it. And when I go to the US, our market cap, even at $500 million, it's considered micro cap. It's not even small cap, it's micro cap, right? And so to make sure that companies have ready access to capital, but most importantly, some degree of stability about their business. If they're running multiple assets, that is an easier way to do capital allocation, ensure strong cash flows, access to capital, and that typically gives good shareholder returns. Outside of, one of the very best shareholder returns you can get is by making fantastic exploration discoveries, of course.
Now, final question for each of you. I noticed a couple of people have dropped off, but final question for each of you. Josh, how's the global push for green and sustainable mining practices influencing the gold sector?
It's probably more secondary impacts in the sense that, and many mining companies in general are being influenced to just reduce carbon output in terms of the intensity of mining. And there has actually been a trend over the last few years for miners, and it requires you to have a project of scale that makes it worthwhile, where instead of having diesel generators, you'll do gas and solar hybrid as well. In some cases, maybe exploring hybrid fleet, but in small underground mining or smaller open pit, that might not make sense. So I think most of that push is definitely just reducing intensity and footprint, first scope, second scope, third scope emissions where practical and possible.
And Nic, how are you seeing it? You're obviously in the production phase. Capital is invariably linked to footprint and ESG compliance and those areas. Is that something that's right at the forefront of your mind when it comes to the development of your project?
Oh, look, absolutely. And people should remember that within Australia, the legal and regulatory framework is very strict, and it requires greenhouse gas emissions programs as part of what you submit to government, right? So we have all of those things. If you look at those new loaders I referred to, right back at the start of the presentation, they're diesel over electric, so 30% less emissions in what they do. The thing to remember that is, gold in itself, sure, 30% into electronics and stuff like that, but gold in itself is a store of wealth. And so humans have decided that we're prepared for the costs in order to have that store of wealth for all the reasons that, people listening to a gold webinar would understand. But the big thing is, almost every miner, their CO2 emissions per tonne are falling. But as the gold price rises, of course, we look for maximum resource conversion, which is one of the reasons you see all-in sustaining costs go up, is we chase lower grade because it's now economic. So, like what at 1.5 gram underground may have been left behind in a $1,800 or $2,000 price environment, at a $4,000 price environment with costs even rising 30%, you would take that dirt. But on a CO2 emissions per ounce basis, often we see CO2 emissions rise per ounce, except on an absolute value they've fallen. That's one of the really difficult things for people to understand about the gold market, because a lot of ore bodies do have peripheral things that for people to chase a cut-off grade. But certainly, anybody investing in an Australian mine or developer can rest assured that we're at, we have very, very stringent standards in these areas.
Well, thanks everybody. That does bring to a close the Q&A element of the presentation. Probably could go all day. There's a lot of interesting topics that are being unpacked as part of this webinar. I'd like to thank everyone who presented today. So thanks, gentlemen.
You're welcome.
Nice. Thank you.
And I'd also like to thank each of you for your participation, both in the webinar and engaging in the Q&A. We hope you found this webinar informative and valuable, and we look forward to seeing you at our future events, where we'll once again dive deep into the analysis of more promising ASX-listed stocks. Thanks, everyone, for your time. Add these stocks to your watch list. Follow them with interest. Clearly, a lot occurring with each of those companies, and follow them